What's going on, guys? D. Anthony here. In this video, I feel that this is going to help you out tremendously when it comes to your trading and, not losing as many trades or, being able to profit just a little bit more. The one thing that I do want to talk about in this video is going to be your risk management strategy. And one thing that I think a lot of you traders do that is kind of debilitating your trading is having too tight of a stop. So how many times have you gotten into a trade only to be wicked out or only to be stopped out by a few points or even a few ticks, and then see that move continue to go in your favor, and now you're going on tilt, you're having FOMO, you're trying to revenge trade. It's a big problem. So again, this video is mainly going to be for those of you guys who are trading prop firm evaluations or funded accounts. When you guys are trading for a prop firm, you have to be able to be a little bit adaptable and flexible. So you need to be able to adapt to the markets, right? So that's adjusting your take profits, adjusting your stop losses, adjusting, the way that you're trading based on the market conditions for that specific day, because each and every single day is going to be different. Even when we're in a trending up market, you're going to have those sideways days, you're going to have those down days. So you need to be able to adapt, and you need to be able to be flexible with those take profits and with that stop loss. So again, one thing that has really helped me is not worrying, not worrying so much about, I need to get 1-to-1. I need to make X amount of dollars on this trade. I want to risk $200 on this trade, so I need to at least make $200. You know what I care about? I care about being right. I care about winning. I care about my P&L at the end of the week, at the end of the month. Am I actually going to get a payout this month? Am I going to get a payout this week? Am I going to be able to withdraw something and put it in my pocket? To me, that's what matters. Everything else that goes on in between that beginning stage and to when that money gets deposited into my bank account means nothing. It means nothing. So a lot of times traders want this really fixed risk, and they want this really fixed take profit, or, I need to get 1.5 R's, or I need to get 2 R's, or I need to get 3 R's because my strategy is telling me that it's hitting at 60% or 58%. So if I don't at least break even over 55%, I'm not going to make money. Guys, you're worrying about too much stuff rather than letting the numbers play themselves out. And if you want to be a good trader, you have to be able to make decisions on the fly. Make decisions that are going to be beneficial to you in the long term. So what does that mean? If I take the first trade of the day and it happens to be a winner, and it's an easy winner, and I didn't have to do anything whatsoever, my setup presented itself, I took the trade, I made $180 on it. 9 times out of 10, I'm done. Right? Depending on your position sizing, we don't even need to get on into how many contracts you're playing, this, that, and the other. Some of you guys trade large size, some of you guys trade small size, some of you guys are all over the place. What I'm saying is that if you manage to get a quick winner off the bell, your best bet 9.5 times out of 10 is just to shut it down. The last thing you should be doing is, I made so much money, I made easy money very, very quickly, let me try to find the next one. It's the wrong thing to do. And normally, more times than not, you end up giving away profits. 2 is the main thing that I really wanted to discuss in this video. And the point that I want to drive home is that you have too tight of a stop. I'm going to give you an example here. So notice how on this 20 SMA play, it closes below the 20 SMA and then immediately starts to come back. This comes back against you almost 9-10 points. Let's say you're someone with a super aggressive stop loss where you're risking 5 points or 7 points or 8 points or even 10 points. You're almost running the risk of getting stopped out. Let's say, for example, you have a 12-point stop loss. And even though this doesn't hit your 12 points, psychologically, let me tell you what happens. It's down in the red, 8 points against you, 7 points against you, and your brain starts to trick you. This is going to stop you out. You're going to have a loser. You're going to lose a lot more money if you don't get out right away. And sometimes it causes you to stop out of your trades manually before you even hit your actual stop loss because you're living in fear of losing. The number one thing that people try to avoid in trading, losing, is the number one thing you need to embrace, because those losers are going to happen. and the faster we take a loss, the faster we move on to the next trade, which can be a winner. Now, here's another setup here. Let's say, for example, someone got in on this move first attempt when it broke through the overnight session lows. As soon as we break those overnight session lows, you get in, it starts to work in your favor and immediately snaps back almost 20 points. How many of you are going to cut the trade down 15, 16, 17, 18, 19, 20 points, and then only to be completely disgusted with yourself when you see this would have went for a full 1-to-1 at 42 points in the money if you just would have held on for an extra 3 to 4 minutes? How many times has that happened to you? Having too tight a stop because you're in fear of losing is killing your progression when it comes to trading. It's killing you when it comes to the amount of money that you're able to make. It's killing your confidence in your abilities to what you're supposed to do. Like, it's killing the, like your confidence in the skill set that you've been spending so much time learning. So what I want you to do is not have a stop loss, because you always want to have a stop loss, and then you always want to have like a mental max pain. Hey, if this does hit my stop loss and I'm playing a manual, kind of stop out where I don't have a hard stop loss on there, there's no limit order, I need to know what's my max pain. Like, what's the most amount of money I'm willing to lose on this trade or on the day? Is it 200, 300, 400, 500, whatever, right? The number is going to be different to everyone, every single trader, because everyone is at a different journey, and they're in a different spot in their progression. But what I'm saying is you always want to have that sort of mental max pain. But what I want you to do is open up that stop loss a little bit to allow this to work. Allow this to wick around a little bit. Again, I want to make something very, very clear. Guys, understand the nature of the beast that we are trading. If you are trading the NASDAQ, this is the wild, wild west, okay? I don't care where you came from, what background, you came from, whether you came from stocks, you came from options, you came from Forex, you came from commodities, crypto, I don't care. When you're dealing with the NASDAQ 100, this is the absolute wild, wild west. You could have one 5-minute candle whip around on you 30, 32 points, 37 points, 40 points, 45 points. If you're trying to go in with a super tight stop loss, 5 points, 10 points, and just try to, every trade take 2 R's, but you're only looking to, risk 10 points and you want to take out 40 points of the market, you're going to have a very, very difficult time. So what you need to do is open up that stop loss, widen that stop loss. Maybe that requires you to take less contracts so you can allow this to move around. Again, if you're someone who normally trades 2 mini contracts, maybe we need to trade like 6 or 7 micros. If you're someone who trades 5 mini contracts, maybe you need to trade 1. If you're someone who trades 5 micro contracts, maybe we need to trade 2 or 3. If you're someone who trades 2, maybe we just trade 1. But the point that I want to make is that we want to be able to be in a move as long as technically there's no damage. So I want to make something very, very clear. Even if someone took this breakdown through the overnight session lows way down here, do you want to really know where you have technical damage? It wouldn't be until way up here, until we break this previous week high. That is going to tell you that there's technical damage to the downside, and maybe you don't have any room. But guess what? Someone takes this play here and they want to set a stop loss right here, right here, right here. Now, again, you want to practice good risk management. I like to use a previous 5-minute candle as a stop. I like to use a 20 SMA as a hard max pain stop. But again, so many of you guys are trying to get out so soon because I don't want to lose. I don't want to lose. I don't want to lose. I don't want to lose another funded account. I don't want to blow another evaluation. But all you're realistically doing is paper cutting yourself to death. Even if you take one trade and you widen up that stop and you lower the amount of contracts that you're going to trade, and let's say the trade does lose and you manage to lose $200, $250, $300 because you're trading 1, 2, 3 micro contracts or 4 micro contracts. Let me tell you something, guys. How many of you guys have lost $1,000 in a day and blown up your account? How many of you guys have auto liquidated yourselves in one day? How many of you guys have pissed away, right? Excuse the language, but how many of you guys have thrown away a funded account or an evaluation account in one day, in 2 days, because you're losing 500, then you're taking another trade, making 100, then you lost 800, and now you're in drawdown. Now you're trying to over leverage yourself to get back to break even. Next thing you know, the whole account is gone. Versus just widening up that first initial stop loss, or on all your trades, widening it up a little bit so you have more room to wiggle. And that's probably going to require you to cut your position size down a little bit, 1, 2, 3 contracts. Cut it down a little bit so you have that room to play with, so you're not chopping yourself up and paper cutting yourself out because you're stopping out at every single uptick. You guys get into the trade and you want this trade to flush 50 points 2 minutes after you get into the trade, 30 seconds after you get into the trade. Guys, sometimes it takes the market 5, 10, 30 minutes before this move even starts to formulate, right? So again, put that into perspective. I think this one thing is killing a lot of traders, progression. I want you guys to definitely 100% have a stop loss, have a max pain. But what I want to do is I want to widen it up a little bit so that you allow the little bit of swings, you allow a little bit of the ups and downs. And then when you do go into profit, and when the move does start to work, I want to be taking profits. I want to take profits. I don't want to cut my stop losses so early. I want to let it move around a little bit, move around. And then when I go green, I want to take those profits. Guess what? Winner, next trade, let it wiggle around, let it wiggle around. As long as I'm on the right side of the market, as long as we're not trying to short when the market's surging higher, or we're not trying to, go long when the market's just absolutely tanking. The market generally, 6, 7, 8 times out of 10 is going to come back and save you. You don't even need to have the most perfect entry. Guys, if you would have shorted essentially any time in the first couple of hours of the market, you would have made money. And how many of you guys chopped yourself up within the first 2 to 3 hours of the market? A lot of you guys chopped yourself up, lost some money, got back in, lost some more money, made a little bit of money, got back in. Guys, you could have essentially bought here, shorted at the bottom, all the way here, made money here, shorted here, made money here. You guys, you could have essentially made money all day within the first 2 to 3 hours if you shorted anywhere. Let that really sink in. So is it the chart? Is it your strategy that's really causing you not to make money? Or is it you not being able to control your emotions and you not working on the things that you need to work on, which is emotions, which is the psychology, which is your trade plan, which is back testing your strategy so you have confidence in it, and actually taking the trades day in and day out so you get that experience level high, so you have the ability to do this each and every single day on your own without needing anyone's assistance. I'll see you guys all in the next video. If you did find any value in this whatsoever, make sure you guys do give me a thumbs up, leave me a comment, subscribe to the channel, and I'll catch you guys on the next one.